And it's a good parallel when it comes to retirement. You may not necessarily know what you are going to do in your retirement, but you're going to find ways to fill the time. And here's a secret. It's not really a secret. I think most people will understand. It's going to cost money, and so you're going to need to have a plan in place. That's what we want to talk about here on the show. The team at America's Retirement Headquarters can help you. Again, the number is 419-794-3030. How does the CEO of America's biggest bank position his business when it comes to adversity? JP Morgan Chase's Jamie Dimon tells Yahoo Finance, well, he looks at how to weather the storms.
I try to run the company such that whatever the range of potential economic outcomes are, we could serve our clients. We'll be there in thick or thin. So I guess my advice is look at a potential range of outcomes and challenge yourself how you feel about if those range of outcomes happened. And so you've really thought it through.
You know, it sounds like pretty good advice when it comes to a business, but in a way, retirement, it's your own personal business. Should it also be how we think about retirement planning?
You really got to know those numbers, and you got to know where things are at and know what we call the guardrails are in your investment portfolio. And if we look at it, right now, in the last week, you had both the Dow Jones Industrial Average and the S&P 500 Index had set all-time record highs. In fact, if you look at things on a global basis, the Nikkei has reached a 34-year high. So you've got a lot of strength in the market, and I hope the market continues going up. In fact, we've had 12 out of 13 weeks. I think it's the most in many decades that the market went up as much as it has here recently. So I hope this year continues to be strong. But if you look at a lot of the forecasts on what the economists predicted the market was going to do this year, we're in a strong pattern right now. So now's the time to take a look at where you're at in your portfolios and your risk level that you have. One of the softwares that we have talked a lot about is knowing what your investment policy statement is and your risk score. So if you haven't had your risk score done, if you want an independent portfolio analysis, give our office a call. What we can do is we can take your investments, put them into the software, and tell you what your risk number is. And it ranges anywhere from 0, like putting all of your money in the bank, to 100 would be what I refer to as like investing in cryptocurrency. So with our clients, we've got to keep them educated. We've got our upcoming Economic Summit that's coming up here in March. It's where we give our State of the Union address. So if you want to learn about how to position your portfolio in 2024, know where we see opportunities that are out there, go to arhq.com. Click on the events tab for the Economic Summit. But when we're coming up with the risk number for folks, I think right now, what I'm trying to do is identify people that have a risk number, say, greater than 65. And looking at those people that have a risk score greater than 65, getting together, having a conversation with them, or at least evaluating their portfolio and saying, what are the risk metrics that you have in your portfolio? Again, with the markets at all-time high, the flip end of the scale is you have fixed rates at all-time high. Is it time to rebalance the portfolio, or does that risk number really line up with who you are? Because it's important as an investor, again, if we think of the concepts of being successful in investing, you buy low, you sell high. We've got markets at record level highs. I'm not saying abandon ship or anything like that. Could be a good time for rebalancing, could be a good time to evaluate what your risk is. And when you're looking at the parameters, these guardrails, our software will actually show you within about a 95% confidence level what the range of returns could be in your portfolio over the next 6 months. So if things continue to go up, what your upside potential is, and if things go down, what the downside is. So I think looking at risk right now is very relevant.
Yeah, and what I'm thinking about is if I'm an investor, and as an investor right now, Nolan, I'm thinking about what are some of the elements of that proverbial storm that our clients should be concerned about, and they're concerned about, and that we're concerned about, and we're talking to them about. First one is inflation, soaring U.S. debt, the upcoming presidential election. I mean, there's a lot of the geopolitical risks alone that see stories about, and so there's just a lot of information out there to be concerned about. So, in addition to that, the Fed has been really they're transparent as best as they can, but right now is a tough time to be an investor because it seems like good economic news is bad stock market news, and bad stock market news is good economic news, and it's like what is it? Was an investor supposed to think when they're getting conflicting messages like this? So this would be my advice to our clients and to prospective clients. We offer our time and expertise complimentary. It doesn't cost you anything other than your time. But what will help you do is make sure, first and foremost, you have an emergency fund. And I think that's an important step to have to prepare for any financial storm, is build a savings account, money markets, things like that, Nolan, to your point, that are going to still pay you a pretty decent interest rate, but build like a 3 to 6 month reserve for your expenses. That's kind of that cushion to fall back on first and foremost. The other advice that I typically give clients is to trim expenses. It's kind of like, being in business, you want to, it's kind of just being in the game, being in the business long enough, keeping expenses low. I feel like that's kind of a big part of retirement too. At least initially, is dipping into it. Have your mortgages paid off if possible. Have your high interest rate debts and credit cards paid off and things like that. That's going to help free up a lot of cash in retirement, so you're not having to worry about selling investments in a down market, basically selling low. That's the exact opposite of what we want our clients to do. And then thirdly, I think one of the biggest risks that clients face right now, that proverbial storm, is inflation. We see it all the time at the grocery store. Prices, these companies are driving the price up of goods and services. And so what I tell my clients is that if these companies are going to be driving the price up, you got to get in the driver's seat. You want to be owning these companies and kind of participating in some of that price appreciation, so that you're actually getting a return of your money back in the form of a dividend. So diversifying your portfolio with a mix of assets and making sure that they're strong stocks that are well capitalized, that have good dividends, I think are going to help reduce your risk of potential, proverbial storm in the markets.
When it comes to storms, I can't help but think of one of my favorite quotes. I don't even know who said it originally, but it wasn't raining when Noah built the ark. We may be doing well right now from an economic standpoint, but there's a change coming around the corner soon, and it's better to go have a plan in place now for when the markets do take their downturns, whatever may cause that, so that you're not doing what so many people did in 2020 and then even in 2022, which is selling low and then buying back high. The team at America's Retirement Headquarters can help you with that independent portfolio analysis, start developing that plan. All you need to do to get started, schedule a time to speak with them, 419-794-3030, or going to the website, arhq.com.